Hello everyone, thanks for tuning in. I'm Emily, the home bookkeeper, and on this channel I help business owners and fellow freelance bookkeepers navigate the ever-changing QuickBooks Online, while also sharing insightful videos like this on all things business ownership and finance. So recently I was sitting at the playground scrolling YouTube and I noticed Graham Stephan's recent video discussing the new tax plan proposal on the ultra-wealthy and big corporations here in the US. After watching his video and hearing his unbiased and factual point of view, I did some research to see what others, like Elon Musk, were saying about the changes, and I came across this article from CNN. So the article goes on to read, as part of its budget proposal for fiscal year 2023, the Biden administration is pushing a measure that seeks to ensure that those worth more than $100 million pay a federal income tax rate of at least 20% on their income, including unrealized gains on assets, which are currently not taxed. Under the present tax code, growth in the value of assets is taxed only at the time of sale, and at lower rates than the highest income rates for investments held for at least a year. The rich often borrow against their holdings to build more wealth and funds for their lifestyles, while avoiding adding to their annual income tax tab. And many have seen their portfolios swell in recent years as the stock market has boomed. Under the current law, when an American worker earns $1 of wages, that dollar is taxed as they earn it, according to a White House fact sheet, which notes that many wealthy people pay lower tax rates than middle-class workers. But when a billionaire earns income because of their investments increasing in value, that gain is too often never taxed at all. Titled the Billionaire Minimum Income Tax, the proposal only applies to the top 0.01% of Americans, with more than half the revenue coming from households worth more than $1 billion. It is expected to raise $360 billion in the next decade. The measure would allow the wealthy who are paying less than the 20% threshold to spread out the top-up levy on unrealized income over 9 years. They would then have 5 years to make the top-up payments on new income going forward, which would also let them smooth out yearly variation in investment income. The wealthy who don't have liquid funds to cover the tax could opt to pay later with interest, and those already paying a tax rate of at least 20% on their total income, including unrealized appreciation, would not even be affected. Democrats have also restarted informal discussions on a more limited spending package with Senator Joe Manchin, a West Virginia Democrat who effectively killed the party's ambitious Build Back Better plan late last year by refusing to support it. Manchin has stressed the spending needs to be paid for. Democrats' past efforts to raise taxes on the mega-rich have floundered. Oregon Senator Ron Wyden's controversial billionaire's income tax proposal to pay for the Build Back Better withered away within days amid opposition from several members of the party last fall. It would have taxed billionaires and the ultra-wealthy on the gain in value of certain assets every year, instead of when they are sold. So it's unclear whether Biden's latest proposal is part of the discussions on Capitol Hill and whether it would receive support from all Democrats in the Senate, which would be needed to pass a spending bill without Republican votes. Senator Kyrsten Sinema, a Democrat from Arizona, has also balked in the past at raising taxes on the rich and corporations. Biden has long voiced support for raising taxes on the rich. On the 2020 presidential campaign trail, he called for reversing some of the Republican-backed tax cuts for high earners and corporations that former President Donald Trump signed into law in 2017. Since coming into office, Biden has put forward several versions of the proposal, each failing to get approval in Congress. He has not included a wealth tax, which had been a talking point of his 2020 Democratic primary rivals, Senators Bernie Sanders and Elizabeth Warren. Last year, Biden proposed raising the top federal tax rate from 37% to 39.6%, its pre-Trump level. He called for subjecting earnings over $400,000 to the Social Security payroll tax, which is currently limited to $147,000 of earnings. He also called for increasing taxes on long-term capital gains on those earning more than $1 million, as well as taxing unrealized capital gains at death. Also, he wanted to raise the corporate tax rate from 21% to 28%, but not as high as the 35% top rate that existed before the Republican tax breaks. A version of Biden's tax plan made it into the Build Back Better legislation, which passed in the House last fall, but failed to advance in the Senate after Manchin said he would not vote for it. Under that bill, the wealthiest Americans would have paid a 5% surcharge on income above $10 million and an additional 3% levy on income above $25 million. It would also have put in place a 15% minimum book tax on the corporate profits that large companies report to shareholders, not to the Internal Revenue Service. This would have applied to companies with more than $1 billion in profits. The legislation also included a 1% surcharge on corporate stock buybacks. The White House budget released earlier this year includes two earlier corporate tax proposals, raising the tax rate to 28% and levying a 15% minimum book tax. Though the Democrats need to fund their spending plans, Biden has repeatedly pledged that his proposals would not raise taxes on anyone earning less than $400,000 per year. Economic models generally showed that his plans did not, in fact, directly raise taxes on most Americans, including one analysis from the Bipartisan Committee for a Responsible Federal Budget and another from the Penn-Wharton budget model. But most economists also assume that workers would eventually bear some of the burden of an increase in the corporate tax rate. While workers would not see a higher income tax rate, their after-tax wages could be lower if the corporate tax rate increased. Let me know what you think in the comments below. And for more business resources, my online self-paced home bookkeeper masterclass, business supplies, gadgets, must-haves, and more, make sure to check out edjconsultinggroup.com/resources, linked in the description box below. And of course, like this video, subscribe to my YouTube channel, and turn on those bell notifications so you'll never miss an upload. If you have any video or tutorial requests, make sure to leave them in the comments below. And for even more behind-the-scenes content of life as a home bookkeeper, feel free to follow me on Instagram @EmmaDawn and connect with me on LinkedIn. And as always, if you need more assistance, personal financial coaching, or bookkeeping and payroll management, feel free to email or visit edjconsultinggroup.com. My firm is fully inclusive and ready to help you along wherever you may be in your entrepreneurship or personal wealth building journey.